obligation to make a return of income for using private credit is recognized in law as an irrecusable obligation, which, according to Bouvier's Law Dictionary, 1914 edition, is a term used to indicate a certain class of contractual obligations recognized by the law, which are imposed upon a person without his consent and without regard to any act of his own. This is distinguished from a recusable obligation, which, according to Bouvier, arises from a voluntary act by which one incurs the obligation imposed by the operation of law. The voluntary use of private credit is the condition precedent which imposes the irrecusable obligation to file a tax return. If private credit is not used or rejected, then the operation of law which imposes the irrecusable obligation lies dormant and cannot apply. Our federal personal income tax is not really a tax in the ordinary sense of the word, but rather a burden or obligation which the taxpayer voluntarily assumes. And the burden of the tax falls upon those who voluntarily use private credit. Simply stated, the tax imposed is a charge or fee upon the use of private credit, or the amount of the private credit used measures the pecuniary/monetary obligation. It is the voluntary use of private credit which imposes upon the user the quasi-contractual or implied obligation to make a return of income. However, when this decision was rendered, there was no privately owned central bank issuing private credit and currency, but rather public money in the form of legal tender notes and coins of the United States circulated.